Okay, so I love talking about the gig economy, and I'm going to start off by saying yes, I think it definitely has a future, and I'm going to tell you why I think it has a future by providing a personal anecdote, and that is myself. So I have worked as a traditional employee for most of my life. However, I did take about a 10-year period off where I was what we would refer to as a gig economy worker myself. My reasons for doing it are what I feel are the best reasons for being a gig economy worker. And those are that you basically get to steer your own ship. So you can set your own hours. You can choose which employer or multiple employers that you work for. You can set hours. Often, if you're not reliant upon a traditional benefit structure, you can get a higher hourly wage in exchange for not having traditional benefits. So there really are a lot of benefits to being able to sort of zip into and out of employment as it suits you. And it kind of allows you to have work around your life instead of having your life work around work. So I think the gig economy is here to stay. Flip side of the coin, again, I'm just going to use myself as an example, as someone who was in a traditional employment structure, and then I went outside of that into more of a gig economy, and then I went back to traditional employment. And the reason I did that are the reasons that are some of the things that might give you pause when you're considering being a gig economy worker. And those are that you don't have that traditional safety net of benefits, generally speaking. Work comp is certainly one of those, but there can also be things like a retirement plan, a reliable health insurance plan. All of those benefits that come with traditional employment can be a real con. And I think sometimes people don't appreciate the risks of not having that framework in place until such point as they discover that they need it. Sometimes they'll figure that out sooner when they go to try and buy a health insurance policy on the open market and have sticker shock. But sometimes they might not realize it at all until a situation where they may have an injury at their work, even if it's at their self-employment, and they realize they don't have that workers' compensation umbrella that is protecting them. And that's not really the way that you want to find out about it. And I think in a couple of minutes, we're going to talk about some creative solutions for folks that are still working in the gig economy for how they could still be pairing that with something that looks like a traditional benefit structure, even if it's not exactly the same. One thing that I think has really caused the con aspect to the gig economy to be brought to the forefront has been what we've seen during the pandemic. Now, certainly this is more on the unemployment insurance side or the UI side as opposed to workers' comp, but its implications are the same across the board. And that is, what if something happens, whatever that something is, and I mentioned a minute ago that it could be an injury that you suffer as a gig economy worker where you all of a sudden realize that you don't have a workers' comp structure to provide you with indemnity. Yes, you can go to the doctor and you can get medical treatment, assuming that you have bought medical insurance. And as I mentioned before, one disadvantage potentially of being in the gig economy is not buying into the traditional benefit structure. But I say that the pandemic has brought this to the forefront because could a gig economy worker go and use their commercial health policy to get health assistance? Yes. But what if they've lost their job? What if they don't have their income stream anymore? And what if they deliberately chose the gig economy route because they wanted the higher hourly wage and were willing to take on the risk associated without having the traditional benefit structure, but didn't realize really what that meant until they were called upon to deal with it. If we look at it from an unemployment insurance perspective and a national perspective, well, the federal government stepped in. And all of a sudden we had the Pandemic Assistance Fund was born, which was the federal backstop to help all those gig economy and self-employed workers to collect some sort of unemployment benefits when traditionally, under a traditional gig employment structure, they would not have had those. So what implications does that have for the future? Well, I don't know. Does that mean that there might be some sort of a larger framework that one might buy into that all gig economy folks would participate in? Or would there be a state program that they could participate in? I don't know. There's implications either way. So I think that leads us to a discussion of what bearing in mind that my personal opinion is that the gig economy is here to stay, and that there are a lot of advantages to participating in the gig economy, especially if it gives you the flexibility you're looking for and allows you to still earn some money while working around your life, maybe family commitments, etc. What could we do to mitigate the risks that we talked about under the cons, right? Because that's really what we're talking about here. So what I thought I would do is throw out some novel, sort of outside the box solutions that I've seen in a couple different places. One is in New York in the Black Car Fund, which is a whole nonprofit that has set itself up to provide workers' compensation and some other benefit structures also for limo drivers in the city. And everybody knows that limos are a big part of New York, right? And they would be considered, generally speaking, to be a 1099 independent contractor. But there was general recognition that having some sort of a workers' comp framework in place for those drivers was a beneficial thing. So they created their own infrastructure and they allowed drivers to pay into it and cover themselves for workers' comp. Another good example that you may or may not have heard of is in horse racing. Horse jockeys, very, very high catastrophic loss possibility in the event of an accident, of course, makes them not a great candidate for traditional, from a risk perspective, right? Not a great candidate for an industry. So they themselves have also created out their own workers' compensation infrastructure, and they cover horse jockeys themselves. They have their own sort of carve out. And speaking of carve outs, I'm situated here in California, and we have unions that have opted out of the traditional comp system and created their own alternative dispute resolution process that incorporates workers' compensation. So there are entire union-based industries that have opted out and created their own parallel framework that still provides that measure of social security, but doesn't operate in the traditional workers' comp structure. Couple other things that I wanted to give examples of are in California. Again, I'm going to mention roofing contractors. So generally, when we think of contractors, we think of contractors as being independent, right, by their very nature, not in a traditional employment structure, often self-employed. But in California, at least insofar as roofers are concerned, it has been decided that the risk associated with a fall from roofing, and this is similar to the horse jockey example I gave a minute ago, catastrophic loss is certainly possible in the event of an injury. So in California, if you are a roofing contractor and you want to get your contractor's license, you need to have a workers' comp policy, even if it's only on yourself. Now, that is not how we traditionally think of things in the gig economy. But again, like the horse racing example, this is one of those industries where the traditional comp framework might not have fit it well, but there is an industry that has stepped in and figured out a way to create special policies to address those particular needs in that particular industry, which I think is really interesting. One other example I would give is the marijuana industry. And I'm sure you've heard many presentations related to marijuana and its implications for workers' comp, but perhaps you never considered it from the employer standpoint. How do you cover your employees for workers' compensation? What if you have agriculture workers working out the field, or if you have retail workers in a dispensary environment, or so on? This is another area where traditional workers' comp carriers may shy away from the risk, and novel, small, I guess I'd call them bit players that are focused only on the niche associated with workers' comp have set themselves up to issue policies just for those that are employed in the cannabis industry. So why do I give all these examples? Well, I think when we're talking about what the future might hold, and we have discussions like we've had in California, California had passed AB 5, which made a lot of national headlines for its creation of specific ABC tests to determine whether someone is a traditional employee or an independent contractor. Well, there was a lot of discussion that happened after that bill passed, surprisingly, from a lot of specific industries that wanted to opt out of AB 5. And that didn't get quite as many headlines, but it did cause a lot of discussion at the Capitol and ended up becoming an actual follow-up bill, AB 2257 in California, that had a laundry list of carve-outs to AB5. One example I'll throw out for you is fine arts. And that would be like a musician that you would hire for an event or that kind of thing. They are on the carve-out list. So now there's discussion about, okay, so we've codified that they are carved out of AB5 and they're not to be defined as an employee. We've said they are going to remain an independent contractor, but what can we do with these folks going forward? So say, for example, you're a pianist. You might want to have a policy on yourself to cover you in the event of carpal tunnel. You could argue, okay, well, you could go to the doctor if you get carpal tunnel under your commercial health insurance and be covered for that from a medical perspective. I agree with you, but how does that help you for indemnity? It doesn't, right? And that's where workers' comp could step in. So I think the future might be commercial insurers or even independent companies, VC-backed or otherwise, coming up with novel solutions, maybe industry-based for particular types of employees, well, contractors, figuring out ways to cover those folks in on an industry by industry basis. So much as we've seen these carve-outs for the roofing contractors, and we've seen the novel policies issued in the marijuana sector, maybe we'll start to see a company come in and offer special workers' comp policies for piano players or actors or any of the other number of folks that were carved out under AB5's cleanup legislation in 2257. Even if you're a state that doesn't have a specific framework in place like California does for AB5 with the carve-out list in 2257, you're still going to have this large swath of folks that are going to fall into these categories that wouldn't necessarily be covered under the traditional workers' comp, which creates that opportunity for insurers to come in and come up with some novel policies, maybe on an industry by industry basis.